Bitcoin holds 65,000, while oil spikes to $84 and chips crash. That mix of war, inflation fears, and tech weakness is exactly why this rally feels fragile right now. Thursday, July 16, 2026. Like and subscribe for daily market updates. Today's agenda: top story, market snapshot, macro and central banks, geopolitical status, commodities, crypto pulse, earnings/IPO and deals spotlight, closing summary. Up next, market snapshot. It's Thursday, July 16th, and the crypto rally is catching its breath. After two cool inflation reports in a row lit a fire under risk assets, pushing Bitcoin briefly back above $65,000 and sending Ethereum to its best levels. Since early June, the momentum stalled today. Bitcoin is holding firm near 65,000 even as two powerful crosswinds hit at once. A global sell-off in chip stocks and a fresh round of U.S. strikes on Iran that has oil sitting near $84. The disinflation story is still the bull's best friend, but war and a wobbling semiconductor trade are reminding everyone this recovery has to fight for every inch. One bright spot: Ethereum is still leading the pack. Why are these numbers moving? Let's talk about what the Federal Reserve is actually thinking in macro and central banks next. Let's read the tape. In crypto, Bitcoin is holding near 65,000, roughly flat on the day, after tagging that level on Wednesday, while Ethereum is doing even better, climbing toward $1,920 and still outrunning Bitcoin. In stocks, Wednesday closed higher, with the S&P 500 at 7,572 and the Nasdaq at 26,269, as money rotated out of chips and into megacap tech, sending Apple to a fresh record. But today the mood soured. Futures turned lower as a global semiconductor rout gathered force. South Korea's market tumbled around 6%, with Samsung and SK Hynix plunging, and that selling bled into U.S. names like Nvidia, Micron, and Advanced Micro Devices. Even blockbuster earnings from Taiwan Semiconductor could not stop the slide, a classic case of good news not being good enough. Oil stayed elevated, with Brent near $84 and U.S. crude near $79 after renewed strikes on Iran. Gold eased to around $4,050, and the 10-year Treasury yield eased to about 4.5%. The dollar softened on the cooler inflation, a modest tailwind for crypto, and for commodities already expected by the market dollars. The rally is real, but today it is under pressure. But oil prices are still high due to global conflict in geopolitical status now. The backdrop for crypto just improved twice in 1 week. First, Tuesday's consumer inflation report showed prices actually falling on the month, with the annual rate down to about 3.5% and core inflation cooling to 2.6%, softer than expected. Then on Wednesday, wholesale prices fell in June too, beating forecasts that called for no change, a second straight sign that the inflation spike is fading. Together they gutted the case for an imminent rate hike. The odds of an increase at this month's Fed meeting collapsed from over 40% to around 10%. That is powerful fuel for crypto, which lives and dies on the cost of money, but do not declare victory yet. Fed Chair Kevin Warsh wrapped up 2 days of testimony sounding as in favor of higher rates as ever, refusing to promise cuts, and traders still price a real chance of a rate hike by October in part, because oil is climbing again on the war. Today brings another read on the economy with June retail sales and weekly jobless claims, which have stayed low. Next week, the Fed's preferred gauge, core PCE, will reveal whether this cooling is real or just a one-month blip. The message: disinflation is winning the month, but the Fed is not ready to hand crypto the easy money it wants. High oil prices mean high commodity costs in commodities where supply fears dominate everything right now. This is why oil will not cool, and it is a two-front story. On the Iran front, far from de-escalating, the U.S. launched fresh strikes overnight, saying they were meant to further degrade Iran's ability to attack shipping in the Strait of Hormuz, and Washington has reinstated its blockade on Iranian oil exports. President Trump did drop his threatened 20% toll on ships crossing the strait, replacing it with promised trade and investment deals from Gulf states, but the shooting has not stopped. On the second front, Ukraine keeps pounding Russian refineries, export ports, and shadow tankers with long-range drones, choking Russian supply and stoking fuel shortages inside Russia, even as Russia bombards Ukrainian cities. Thousands of seafarers remain stranded around the Gulf, and each fresh strike risks pulling more of the region into the fight. Two wars, both squeezing crude, are why Brent sits near $84, up roughly 16% from its recent low. For crypto and gold, the chain is direct. War keeps a floor under oil, oil keeps a floor under inflation, and sticky inflation keeps in favor of higher rates fed in the game, which caps how far risk assets can run. The market is betting neither conflict spirals further this week. Treat every fresh headline from either front as fast-moving, and until confirmed, unconfirmed. That brings us to Crypto Pulse. Oil is the thread tying it all together, and it refuses to fall. Global Brent crude is holding near $84 and U.S. crude near $79, up around 16% from the recent low after the latest U.S. strikes on Iran and the reinstated blockade on Iranian exports revive supply fears. Layer on Ukraine's relentless attacks on Russian energy, and the world is short of spare supply from two directions at once. That is the single biggest obstacle to the Fed cutting rates and the biggest cap on this crypto rally. Gold, by contrast, has gone quiet, steadying around $4,050 after a violent week that saw it crash below $4,000 and then bounce. It remains down about 26% from January's record near $5,600. Silver held near $58. The pattern is telling. With inflation cooling, money is drifting away from gold and toward the risk assets, crypto included, that benefit most when rate cuts come back into view. Tech earnings are mixed today, with chip stocks falling even after strong results in earnings/IPO, and deals spotlight next. This segment focuses on crypto markets showing signs of recovery after recent panic lows. Bitcoin holds near $65,000, close to its 3-week high from Wednesday and up roughly 4% for the week. Ethereum leads the charge as a standout performer, climbing toward $1,920 at levels not seen since early June, while pressing major resistance near $1,940. It continues to outrun Bitcoin with an improving Ether to Bitcoin ratio. Solana traded near $76 and XRP around $1.1, both slightly softer as traders trimmed risk amid the broader chip rout. The rally's foundation is real. Improved inflation data revived rate cut hopes, prompting a tentative shift in flows. U.S. spot Bitcoin funds pulled in roughly $190 million over 2 days following a brutal 10-day outflow streak of nearly $3 billion, though net outflows persist overall. Short liquidations added fuel to the move. However, traders must note that the fear and greed index remains stuck at 26, indicating fear territory rather than euphoria. Today's tech rout and renewed war headlines are precisely the shocks capable of stalling this cautious recovery. Bitcoin dominance holds near 56%. Key resistance sits stubbornly at $65,000 with support back near $62,000 for Bitcoin, while Ethereum targets $2,000. Momentum is building behind the Clarity Act, creating a constructive setup despite Citigroup's caution and its flagging of an $82,000 target. This remains a rally that must keep proving itself against lingering macro challenges. So here is the state of play in closing summary, where we wrap up everything that matters for your portfolio today. The corporate story today is a paradox. The best earnings in tech cannot lift the stocks. Taiwan Semiconductor, the company that makes the world's most advanced AI chips, reported blockbuster results, with revenue near $40 billion, up about a third from a year ago, and at the top of its company outlook. Yet chip stocks fell anyway, as investors fret that AI spending may be peaking, and that how expensive assets look relative to earnings ran too far. That followed strong numbers from ASML on Wednesday, and a record quarter from Morgan Stanley. The rout was brutal in Asia, where South Korea's chip giants sank hard enough to drag the whole market down about 6%. The next big test comes after today's close, when streaming giant Netflix reports. Health insurer United Health already beat this morning and jumped, a bright spot away from tech. The theme to watch, whether the AI trade can find its footing again. Finally, let's turn to closing summary. So here is the state of play. A crypto rally that has come a long way fast, now running into resistance. The single biggest tailwind is disinflation, two cool inflation prints in a week that have revived hopes the Fed is finished hiking and could eventually cut, which is exactly the environment crypto craves. The single biggest headwind is the collision of a global chip sell-off and two wars keeping oil near $84, a combination that keeps the Fed cautious and risk appetite fragile. Between now and the close, watch three things: June retail sales for the health of the consumer, Netflix earnings after the bell, and whether Bitcoin can hold 64,000 while Ether pushes for 2,000. The trend has turned friendlier, but the tape is still a tug-of-war between a friendlier Fed and an unfriendlier world. If you want this map before every open, subscribe and we'll see you tomorrow. Bitcoin holds near 65,000, while Ether approaches its $2,000 resistance level today. Investors should closely watch June retail sales data before making major moves on risk assets this afternoon or tomorrow morning, especially ahead of Netflix earnings later in the day globally. A crypto rally has gained significant momentum quickly, but now faces headwinds from geopolitical tensions and tech sector weakness. However, recent cool inflation prints have revived hopes for Federal Reserve rate cuts, which benefits digital assets. Despite these gains, global chip sell-offs and ongoing conflicts keep oil prices elevated near $84, maintaining a cautious stance among the Fed and leaving risk appetite fragile until market close. Thanks for watching Market Pulse Daily.